And there's actually a very interesting chart that I always go back to, which is called the Benner cycle. I can't remember the exact name, but it's called the Benner cycle chart. And this was actually created in the 1800s by a person called, I can't remember the name, but Samuel Benner there. Samuel Benner was a farmer from the 1800s who wanted to understand how market cycles worked. And in 1875, he published a book forecasting business and commodity prices. So he created this chart which predicted every cycle top and every cycle bottom. And he has almost got this accurate to the T. And for example, in 1945, we had World War II, right? Was it the end of World War II, right? And then we had a crash in the market. And we had 1981, which was a stock market crash or real estate crash, as you mentioned, Kanna, right? And then that crashed the market. And in 1999, we had the dot-com bubble, which crashed the market. And in 2019, we had COVID, which crashed the market. And in 2023, it was the bottom of the market, that's when Bitcoin and other assets started climbing again. And it says here in the middle, these are minor crashes. At the top, these are major crashes. At the middle, these are cycle top minor crashes. So in 2026, it says that we're going to have a minor crash, and we're going to have a bear market all the way to 2032. And 2032 is going to be the next bottom of the next cycle, and then we're going to go to all the way have a bull run all the way to 2035, and then that's when we're going to have the next major crash, like we did in COVID, we did in dot-com bubble, we had the real estate crash and the stock market crash in 1981. So it seems like money is literally following this chart. So I don't know if you have any thoughts on this, Kenna. What you think on this?
Yeah, there's an interesting YouTuber, Jason Pisano. I think that's how you pronounce his name. And I really like his market outview because he brings in more than just regular markets. He also brings in the real estate market. And that has, from ever since real estate was being sold, it has the data from that. And we're looking at 2026, 2027 as the cycle top for that. And most things follow that as well. So when you look at that, a lot of people, are saying, oh, we don't have a bull market. I think right now that's what the market makers are trying to do. They're putting the fear in the market. It's over. The sentiment is low on crypto Twitter and things like that. But the patience of crypto Twitter and the average trader is almost none. And when we want to look at what makes good traders are very difficult to swing trade. You have to be a pro to be scalping and swing trading. It's difficult to outperform the market. And the expression time in the market is greater than, timing the market. That's what it's about. And when you can get into good projects and just have patience and walk away, some of those are your biggest gainers. Like I said, I lost a lot of followers when I said I was cashing out of the market in the beginning of December. You'll remember, you guys, when we were talking before and I called, the bull market has started and everybody started laughing at me. And I lost a ton of followers for that because I was like, we're making higher highs and higher lows. That is a bull market. It's not a raging bull, and we haven't seen a raging bull yet. But if you look back when we were saying, hey, get into the market, yeah, you've had some 20Xs, 30Xs, 100Xs since that time this year. If you're just getting in now, you're at that last 20 to 30% of the boom, right? And that's when the euphoria is going to kick in. And that's when people think this is going to go on forever. And they're going to get rinsed just like they did last time, and same thing. I'll call it on my Twitter. And nobody times it perfect. I'm not saying I'm perfect. I didn't time the December top perfect. I was out probably a week early, but I took a lot of gains and I sat and I bought the bottom.